Hello everyone, thanks for joining us this morning and welcome to this educational presentation of the last chance to generate consistent entry points. And the reason why we labeled that as last chance is because our two-day course or our college is going to be starting very shortly, and this is the last chance to register before we actually close up all of the seats and all the attendees and keep it to a very limited number so that we can make it a little bit more intimate. A lot of people have asked us in the last couple of presentations why we are focusing so much on entries. The main reason is because over the years, I've been trading for roughly 4 decades now, and over the years of teaching and talking to a lot of our students and prospective students around the world, that is their number one issue, their entry point. They seem to have a method that's based on something that's consistent. It can be news, it can be some indicators. It's just that their entries are a little bit faulty. Maybe they get in too early. Maybe they get in too late. Maybe it doesn't generate a signal when they think they should be getting in, so they don't really feel confident with their entry point. That's why we devised steps. I'm going to be talking about that today. But here's a perfect example of what we're talking about. Let's look at this current chart here in GLD. That's the ETF for gold, okay? Now this stock represents the gold index, and as you can see, it's been trailing up for the last 3 or 4 months. Let's say that you had liked gold, but you didn't know how to get in, or maybe your strategy didn't generate a signal. Or let's say that your strategy actually generated a signal right here, and by the time you got in, you were sitting for another month or two before anything happened, so you got out, you exited before the nice big run-up. Or even still, let's say your strategy or whatever your trading is based off got you in right here. You got a nice little profit, you got out, and then you watched it go higher and higher. Here's the beauty of the course we're going to be conducting in the next week or so. As you can see, it generates signals all the way up. So you can take your pick as to which one you want. As long as you feel comfortable that you should be purchasing this, it generated nothing but buy signals along the way. As you notice, it didn't generate any sell signals. And you could have taken advantage of the great idea you had in gold and had some really nice setups generated by these proprietary entry points. And as well, potentially could have captured upwards of 18 points. Now, the beauty of all this is that it's these setups and these entry points are generated automatically on our platform, the PTS Primo charting platform that I developed with ProTrader Strategies. So this platform automatically will generate these entry points, and it's up to you to decide whether you want to take them or not. So welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. 10 years ago, I teamed up with ProTrader Strategies with one goal in mind, and that was simply to educate traders. And someone would say, well, why do you want to educate them? Why don't you just want to give them the signals or tell them what market to trade or, push them in the right direction? Because that's really at fault for why most traders fail. Roughly 85% of all traders fail, usually within the first year of trading. And that's because you're not making your own trading decisions. You're basically letting someone tell you what to buy, what to sell, what time frame to trade. And what we're trying to do, especially with the steps course, is just give you finely tuned entry points after you've made your decision that you want to buy or sell something. So you should be in charge of your trading. You just need a little help with your entries, and that's why we devised this specific course. Now, I'm going to go into the detail as to the curriculum of this 2-day course, as well as what we're going to be teaching and sharing with you in the 2-day course. But before we begin, as always, we are required to share with you our disclaimer. So please take a moment to view it. I'm going to show you a lot of performance results from current setups using steps, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also remember that all examples are strictly for educational purposes only. Once again, we're required by law to share that with you, so as you're taking a moment to view it, I'd also like to invite each and every one of you to follow us on Twitter. Excuse me. Here's our handle right there, abbreviation for Specialist Trading. Every day I post different information, educational information from signals our strategies have generated and kind of sharing with you why these signals were generated to educate you, as well as little bits of financial wisdom. So lots of great free education. Feel free to follow us on Twitter. Now remember, once again, before we begin, I just cannot state it enough that we are different from other webinars you may have attended in that our only goal is simply to teach you. Why? Well, because a good mentor does not trade for you. A good mentor teaches you how to trade. Now, this is the way I was taught some 4 decades ago, and what I feel is the cornerstone behind sustaining my trading for those 42 years. So this is what I'm trying to instill in all of you. We're not here to tell you what to buy or what to sell, how to trade. We're simply here to share with you high probability setups that are very consistent so that you can decide which one is best for you, okay? So that's what the Specialist Edge is. rooted in simplicity, and mainly in making you in charge of your trading decisions. Okay, so before we begin, once again, since this is a class, I want to take all of your questions, but please wait till the very end to ask. I promise I'll get to each and every one of them, but I have a lot of slides to share with you, a lot of current slides, and I want to just go through them and show you the power of steps. So please wait till the very end, okay? The only question I will answer is the most common. Is this being recorded? Yes, it is. We record all of our webinars, so if you have to leave early or if you're leaving, or I should say you have technical issues, don't worry. We'll send each and every one of you a link to this recording. All right. With that stated, let's begin today's educational class. Now, I want to share with you what my mentors taught me 4 decades ago on the trading floor of the stock exchange. That's where I first started trading. And even though I had access to a lot of, at the time, computers, we're looking at them now, there were probably less power in them than you have in your cell phone. But, we had access to information about what the institutions were doing. We had all these indicators we were following. We looked at a lot of fundamental news. And guess what? I couldn't make a dime using any of that. One of the big problems was because of my entries. So I really was, getting in too late, getting in way too early. I was just having a terrible time. And I'm sure we've all been there before. One of the worst feelings is to get into a trade, immediately get stopped out, take a loss, and then the minute you get out or you're stopped out, the trade goes in your direction, right? That's a terrible feeling. So that was happening to me a lot. And here's what my mentors first taught me some 4 decades ago. They said, Steve, the first thing you have to focus on is that there are only 2 types of entries, okay? Don't overcomplicate things, bring it in the kitchen sink. There's only 2 types of ways to enter. Now, the first one is a continuation entry. So what exactly is that? Well, a continuation entry is when you see an established trend. Let's see a stock going straight up. Or remember we have these fast markets about a month ago when the market was going straight down on these tariff news and everything was just going straight down. That's the perfect scenario for a continuation trader, when a market is really moving strongly in one direction. Most traders, myself included, have a very difficult time trading them because we don't know when to get in. So continuation traders like to see a strong established trend, and they like to get in as that trend is going. They don't care if they're paying up. They don't care if they're buying at the top, because a continuation trader likes just to get in and likes to jump into that strong trending flow and take advantage of it, because they feel there's a lot more room left to the upside if you're buying or to the downside if you're selling, okay? Now, the second style is called a pullback type of entry. That's for a different type of trader. These traders wait for price to come back down before they buy, or they wait for price to go back up before they sell. You see, they're not concerned with jumping into a flowing river and going downstream. They want to wait for the river to slow down, maybe to pull back a little, and then they get in on their raft, and then they go down the river, okay? That's the way pullback entries work. So if we see here in this generic setup, with pullback entries, you have a nice trend that goes in a specific direction. In this case, it's going up. And then where everyone thinks it's ended because it starts to go down, you see that as a pullback or just a pause to the downside. Pullback traders like to buy in these areas, somewhere right here, according to all the requirements, because with a pullback entry, usually the trend will resume. So you're buying at a lower price instead of jumping in while it's going higher, okay? Same thing can work to the downside. Now, here's where steps comes in. This is the proprietary, these are the 2 proprietary techniques for entering, and this is where we're going to be teaching you how to apply them in this 2-day course, okay? Because remember, once again, through our research and talking and a lot of testimonials, this is where most students have difficulty with their entries, regardless of what they're trading. It doesn't have to be one of my strategies. It could be one of yours. It could be something you've devised. It could be something from another webinar that you purchased. It could be something that you made up. It makes no difference, but you still have very difficult time entering. This is where steps comes into play. All right, so what exactly are steps? Well, steps just stands for short-term entry points. That's all it is, okay? So we're giving you entry points to use for any technique, any strategy, any time frame, any direction, because this is where you have the biggest difficulty. But before we show you examples of how simple it is to apply steps and how well steps work, let me share with you and explain what steps is not, because steps is not a strategy nor an indicator. But steps are simply two completely different proprietary entry techniques. And we underline here proprietary. That means we're keeping the rules in-house. Now remember, this is not a system. This is not a strategy. We're just keeping the first serving in-house because it can be applied to your current trading method or used as building blocks for the construction of one. So this is not a system or a black box in any way. I know a lot of people have trouble with that. They say, well, how come I'm not being told the rules? Here's the difference. When you have a system, a black box, that means the entire requirements are kept quiet. You don't have any real idea of what they're based off of. You're basically just waiting for the system to spit out buy or sell signals. You have no idea what it's based off. You have no idea what your risk is. You just know that, well, this stuff has been back tested and researched 100 million times, and when it spits out a signal to buy or sell, I just blindly take it. Okay, that's a system. Here's the difference. Steps is just one piece of the puzzle of a strategy. In other words, to have a full-fledged strategy, you need, obviously, some requirements that have a setup in place that tells you this is high probability buy area or high probability sell area. Then you need an entry point. Then part 3, you need some type of exit point. Then part 4, you need some type of stop placement. Then part 5, you need some type of money management to control and manage the trade. All right, those are all important pieces of the puzzle of any method, of any technique, of any, or I should say, of any strategy. But an entry technique is just one of those pieces of the puzzle. That's why we can afford to keep it proprietary. It's okay. You should have all the other pieces of the puzzle in place. And most of our traders already have that. Most of our students already know where a high probability entry point is or a high probability buy area is. They just have a wrong entry technique. So this is the gap we fill. This is what we're providing for our students around the world. Now, the beauty of this is that they are automatically generated on our platform, the PTS Primo charting platform, so that you don't have to worry about calculating. We've taken the hard work out of it for you. That's why we've kept it proprietary, because it's automatically set up on our platform. This is the educational platform that makes trading steps simple. Okay, so let's show you some examples, okay? Remember, there are two types of traders, two types of entry points. The first is a continuation. Steps 1 deals with continuation trades. We're looking for an established trend, and rather than waiting for price to sell off so we can buy lower, or rather than waiting for price to rise so we can sell higher, we're the type of trader that says, listen, we just want to get in. This thing is not slowing down. Remember when the market was going down last month and it just kept going lower and lower and lower, down 800 points in one day. All right, there were virtually no stops or no pullbacks, no resting points. It kept going lower and lower. Steps 1 was a perfect entry technique using for that particular scenario. So let's show you some examples here. Remember, steps 1 are entry points designed for continuation traders. And an easier way to say that, these are for traders who like to buy high and sell higher, okay? All right, so let's look at this example and beyond, all right? This was taken just at the end of July coming into August. Now, the stock kind of had a little sell-off here, a pullback, and then starts to go higher. So we have a nice established uptrend in place. Rather than saying, well, I'm going to wait for it to sell off before I buy some of this, okay? I think it's a little bit too high. The overbought, oversold indicators are too high. I'm going to wait for a little sell-off. You're the type of trader that says, no, this thing is not going to sell off. It's going to go higher. I'm just going to jump in. So what you would do on our platform, if you like this stock, remember, you have to be in charge of deciding that you like this, that you want to purchase it. Once you've decided that, you need a fine-tuned way to enter. You would click on steps 1. The drop-down menu appears, click on signal arrow, and guess what? Right here at this point, at the very high of this last month or two, when it closes the high, it's actually generated a buy signal. Now remember, continuation traders don't mind buying at the high because they feel, according to their research, according to their strategy, it's going much higher. And this would have been the right decision because in the middle to end of July, Beyond went up 60 points in the next week, okay? So this is how this works. If you had waited for a sell-off, you would have missed this entire trade. And you would have been kicking yourself saying, you know what, I wanted to buy that, but I didn't know how to enter. This is where steps comes in. How about this example in KMPR? Okay, this was in the first week of August. Doesn't look like much is happening, and then it falls out of bed. Okay, you wanted to sell this. You didn't like this, and so you're a continuation trader. You click on steps 1 in the drop-down menu, click on signal arrows, and it automatically generated all the signals. Now, looking back in hindsight, we had a couple of buy signals here that would have been losses. Here's the beauty of what I'm going to be teaching you in the course. Because sure, we could just say, hey, purchase steps, it automatically spits out these buy and sell signals, and that's all you need to do. But the beauty of steps is not in the calculation. It's not in the formula that determines where these signals come from. The beauty of it is in knowing how to apply it, and that's where the course is so valuable. Because in the course, I will teach you a way to filter out some of the good from the bad setups. For example, in this example in KMPR, you would not have taken these buy signals using the technique I'm going to be sharing with you in the course. And therefore, you would have taken the sells, would have generated potentially 10 points to the downside. How about an ROKU? Okay, same thing here. Not much is happening. Looks like it's in a small little downtrend. You think, according to your strategy, this is going higher. All right, you're really excited because you want it, but you're the type of trader that you need to wait for that strong trend. But you just want to check it out, and guess what? That strong trend does take place. You have a strong gap up right here in the beginning of August, and then it continues to go higher and higher and higher. How could Steps 1 have helped you? Well, once you click on the Steps 1 tab here at the very top, you see that, well, we generated a sell signal here. Would this have been a profitable trade? No, you would have lost money. Once again, with what I'm going to be teaching you in the course that I have rarely spoken about, it would have kept you out of that trade altogether. And once a nice established trend was going to the upside, you could have, according to your own decision, taken each and every one of these setups for a potential gain of 30 points. Remember, the beauty of steps is not in figuring out what it's based off of, it's in figuring out how to apply it correctly. This is the only thing I'm going to be teaching you in the course that you would never learn anywhere else. Now, if you're the type of trader that likes a lot of signals, a lot of setups, well, guess what? Once you see these really strong trendy markets, Steps 1 is perfect for that. Okay, look at all the setups. This is for traders who just want to get in. They don't want to wait. They want to get in because there's a strong trend in place and they think it's going to continue. Steps 1 is perfect for that. You can also apply this to the upside. Okay, look at SHAK here, S-H-A-K. This is going back to January, at the beginning of the year. All right. Obviously, in hindsight, this thing has gone straight up. Applying steps, look at all the setups you could have been taken here. Let's say you really love this stock. Let's say your strategy or the way you like to trade is based on fundamental news. You looked at all the research. You researched the company. You did all your hard-earned, experimenting with all your planning. And guess what? You didn't know where to get in. This is where steps could have really helped you. Now, sure, there was one sell here that didn't work out. This is what we mean by when we say our methods and our techniques are extremely consistent. Consistency means you will have losses from time to time. That's okay. You had one loss here. Everything else would have worked out nicely, okay, depending upon where you wanted to place your stop. All right, now that was Steps 1. You see how that could really help you if you're that type of trader that doesn't want to miss the big moves. Think of it. Next time we get a tremendous move to the upside or the downside, you're going to want to be applying Steps 1. But what happens when the market is just moving very orderly? And what happens when you're the type of trader that says, listen, I'm getting older. I don't need 20 million trades a day. I don't need to be trading 10 times a day and then at the end of the month, have millions of trades. I only want to trade maybe once a day, maybe once a week, maybe once a month. This is where Steps 2 comes into play, okay? Steps 2 are entry points designed for pullback traders, okay? If you're not familiar with what a pullback trader is, once again, these are traders who like to buy low and sell high. All right, completely different from Steps 1, where they want to buy high and sell higher. All right, so let's look at this example here in ROST. This was in July coming into August, okay? As we see here, we had a nice run up. We had every close was closing higher, and then all of a sudden, this happened, okay? This is where traders say, hey, the trend has changed. Look at this. We had a bearish engulfing pattern right here. We have another bearish engulfing. This is obviously in a downtrend. I don't want to buy this, but let's say your research says, you know what, this is still a really good investment, and I want to buy this. I just don't know where to get in. Is it going to keep going lower? Is it going to, stop and go back up? I don't know where to get in. All right. With the new Steps 2 course, all you would have to do is click on Steps number 2 in our platform. In the drop-down menu, click on Signal Arrow, and guess what? At the very bottom of the sell-off, it generated a buy signal. So remember, you still have to determine whether you like or don't like a stock, a currency pair, or future. But if if you need to have a really fine-tuned way to enter, this is where steps 2 comes into play. Because it didn't have you buying here or here, it had you buying right at the bottom. And then look what happened. This is a perfect example of a pullback trade, where traders like to buy low and sell higher. You had potentially 18 points you could have captured in the next week coming into August, okay? This is a great example of a pullback trade. Now this can also work to the downside. Let's say, you say to yourself, well, wow, I'm in this trade. Maybe some guy in your old course recommended this. Maybe you went to a chat room and you said to yourself, okay, I'm going to buy this. And then it continues to go lower and lower and lower. One of the best ways to use steps 2 is for an exit plan. A lot of times you don't know where to get out. The stock continues to go lower and lower, and you bought OLLI, let's say right here, and it didn't work out right. It didn't hold, and it went lower. So what you could do is wait for a little bounce, and where everyone is saying, hey, see what we told you? You just got a little bit too early. This is going to go back up now. Look at this nice big gap up. This is a bullish engulfing. We're probably going to go all the way back up here. So maybe you bought it a little too early, but in a couple of weeks it'll be higher, right? Well, not according to steps 2. Click on steps 2, signal arrows, and this is a sell sign right here. So if you were long, this may be a good way to exit a trade. Rather than take a huge loss, well, you take a small minimal loss and get out, because that small loss could have eventually turned into a 30-point loss. Now, if you took that as a selling opportunity and went short, well, that's 30 points potentially could have captured. Now, see, we didn't know that the stock was going to gap down here at the end of August. We had no idea. But the beauty of steps 2 is that it really fine-tunes your entry and exit point. So you can use this either as an entry point to go short, or you could have used it as an exit point to get you out of a failing investment. How about KO? Okay, this is all the way back in May 19 coming into the end of August. Now, remember, we showed you where steps 1 would have purchased, all along the way up. But remember, steps 2 are for traders who only want, these high probability setups based off of buying low and selling high. So as we see here, we had a nice sell-off right here. Right at the very bottom, a buy signal was generated, okay? You could have ridden that up all the way, or waited for another sell-off right here before a nice gap up, and then when another sell-off continued, gotten in somewhere right here before a nice upward move. This is the difference with steps 2 for the trader who just wants these high probability pullback entries. As we look here in NOC, we see here that the stock is going higher. Some people say, well, you know what, it's a little overbought. I think it's going to sell off. I think we may be topped out. And it starts to go down lower. So you say, you know what, this is topped out. I'm getting out of this. Look, we've had 4 straight down days. That's a bad sign to me. And that chat room says that all the institutions are selling. I don't want to do anything, okay? But on the other hand, there's another trader that says, no, I've done the research, and according to my strategy, this is actually a buying opportunity. I just don't know where to get in, all right? Is it going to stop here? Is it going to go a lot lower? Well, no one has that answer 100% of the time, but you can improve your odds for consistency by adding steps 2, because steps 2 actually generated a buy signal right here, and you could have used that to enter and potentially captured 30 points in the next week coming into the second week of August, just a few weeks ago. Let's look at Netflix. Now, here's a perfect example of what we're going to be teaching you in the class. Remember, you can't get this anywhere else except in our 2-day course. As we see here, Netflix looks like it's falling out of bed, but let's say you really like Netflix. Let's say you really like it and you think that this is just a pullback, but you don't know where to get in. Is it going to pull back to here? Is it going to stop right here? Click on steps 2 and a buy signal is generated here. So you're all excited. You say, this is great. I'm going to just buy at the market and it's probably going to go up and make new highs. And then this happens. Guess what? Coming into the second week of August, you would have lost 80 points. That's a lot, all right? Now, with the technique I'm going to be sharing with you, only in the course, you actually would have filtered out this trade and never even taken it. So some of the best trades are the ones you never take. So even though it generated a buy signal there, with steps 1 and step 2, there are ways to filter out the good trades from the bad. We can't filter out everything 100%. Nothing is always 100% correct, but we can at least filter out some of those. And this would have helped you greatly with a buy signal in Netflix. Now, as we look here once again in Shack, remember we talked about how steps 1 would have generated all these signals. You would have had literally hundreds of signals to go long. With a steps 2 setup, you would have had just a few. One right here, Could have taken advantage of this nice move up coming into May, and then another one right here. That's the beauty of steps 2. All right, it doesn't generate a lot of signals, but it gets you in at these high probability setups close to the bottom to go long and close to the top to go short. Now, a lot of people say, what about news, Steve? What if a news event comes out? That's not going to help me, right? Well, remember, nothing is 100% guaranteed, but let me show you something that happened in July, a couple of months ago. Coca-Cola shares bubble up to a new high, okay? It beat its second quarter earnings estimation, okay? Up 6% to a new high. As we see here, here's when the news came out, after the earnings reports, okay? This is where people say, so many times I get emails all the time saying, Steve, gosh, you know what? I liked this stock or I liked this, currency pair or something. And then some news came out and I missed it entirely. They said, can your stuff help me? I said, listen, this is not guaranteed 100%, but a lot of our techniques and methods oftentimes will generate signals prior to the news in favor of what the news is. For example, let's say you liked Coke, but you missed it when the news came out. Well, if you had steps, in this case, steps 2, click on the signal arrows, and you would have been able to get long 2 days before that news came out, okay? And been able to capture that profit prior to the news. So this is the beauty of our techniques. Many times they will give you signals in favor of the news direction prior to the announcement. Here's another intraday trading example here based off some news. The market's gapped down on the opening. This was the end of July coming into August. Okay, we had a really negative day here. This is when we started to really go down strongly and we went into that big down move, okay, in the markets last month. Let's say you base your trading intraday off support and resistance. Here's a 30-minute chart of the spiders. So you're waiting for that support to be broken. And we had a big gap down day that day, July 30th. So you say to yourself, this is great. This is the breakdown I've been waiting for. On a 30-minute time frame, I'm going to sell. So you get short the spiders, or maybe you buy the puts. And then for the next 2 days, absolutely nothing happens. In fact, it even goes higher than where you got in. So now you're saying to yourself, wow, maybe I was wrong. Maybe that was just a fake out to the downside. I don't want to lose any more money here, so I'm going to exit. So you exit with a small loss, and then this happens, okay? Remember, this is what happens so much to traders. It happens to everyone. How could steps have helped you? Well, remember, when you have a really strong move in one direction, what you want to do is use steps 1. And if you clicked on steps 1, look at all the entry points you could have had. Now, obviously, you may not have taken these first 2, but once you started getting that move to the downside that you really liked, you could have started right here, here, and here. You could have gained an extra 15 points to the downside. So this is what we mean by fine-tuning your entries. So many traders have the right idea, such as this case right here. You had the right idea to short the market. Your entry just got you in a little bit too early. So what you may want to do with steps 1 is to say, you know what, I'm going to wait for that big trend to start and then just jump on board. It's like waiting for the train to leave the station and then just jumping on board once you see that it's going, all right? That's the way steps 1 can really help you. Now here's another example in a 15-minute chart of the E-mini, okay? An entirely different market, different time frame. How could this have helped you? Steps could have helped you. Well, if you want to use steps 1, look at all the signals generated. Some are better than others, and I will show you in the course which ones that would have been higher probability to take. But if you only wanted to have a few signals, maybe only one, you go to steps 2. And look at, you could have had this high probability setup right here at the very bottom and ridden this all the way up. Lastly, let's look at a monthly chart of the QQQs. That's the ETF that looks at the NASDAQ 100 index, okay? Let's say you were lucky enough to purchase right here in 2009, right at the bottom of the real bear market we had, right before we started to go up. You had a great investment there, okay? Now, looking in hindsight, let's say you wanted to enter into your position some more, okay? When you wanted to re-enter, you wanted to, maybe you got out and you want to get back in, or maybe you wanted to add to your shares, to your investment. Well, if you added steps 1, look at all the opportunities you had to get back in, okay? Remember, steps 1 is not telling you to buy this. Steps 1 is just furnishing you with entry points. You already have to have the mindset that you like the markets, in this case, the QQQs, and you want to buy more. But let's say you're not that type of trader that you want to continue to pick up tons and tons of shares. You just want these high probability entries. Well, then you switch over to steps 2. And it would give you 2 opportunities in the last 10 years to get back in. Okay, so let's review before we go into the question and answer portion. Remember, as my mentors taught me some 4 decades ago, simplify things. Don't bring in the kitchen sink because there's basically only 2 types of entries. You're either going to be a continuation trader where you buy while the market is moving in one direction, or you're going to be a pullback trader with a pullback entry when you wait to buy low or sell high, okay? All right, let's review steps once again. Steps can be applied to any strategy. So I don't care if you have a strategy that's based on fundamental news. That's fine. You can improve your entry points with steps. I don't care if your strategy is based off the institution. That's fine. You can improve your entries with that. Steps can also be applied to any market. So even though we showed the majority of the slides here today with stocks and a few futures, you can apply it to currency pairs. We have tons of currency pair traders that can use steps. You can apply it to Bitcoin. You can apply it to the futures markets, as you just saw. You can apply it to commodities. It makes no difference. Steps can be applied to any market. Well, someone can say, well, Steve, I trade tick charts. You can apply it to any time frame. I trade tick charts too, and I use steps, all right? Makes no difference. You can use it with range charts. You can use it with open, high, low, close charts. You can use it with candlestick charts. It makes absolutely no difference. And lastly, you can use it with any direction. Some traders say, well, Steve, I only like to buy. Okay. If steps deems that there's an entry point to the upside, it will generate it automatically for you. So let's say you're really bullish on this one stock. Your strategy says to buy it. If steps does not generate a buy signal, I would not take any trade. I would not just buy at the market. I would wait for steps to generate it, because many times steps won't generate a buy signal, and then you'll see that whatever you're looking at to buy goes straight down. Well, that was steps trying to keep you out of a wrong scenario for buying. Okay. Now, we're going to be holding the 2-day course very, very soon. We were planning on tomorrow. We may wait till next week, depending on how many more students we sign up, but we want to keep the classes very intimate, so we're not going to sign up a ton more, okay? This is day 1. We're going to be talking about steps 1. I'm going to be into the complete continuation entry class, where we're talking exactly how to trade steps 1. In day number 2, we're going to be covering steps number 2, the complete pullback entry course, and we're going to be talking exactly how to trade it. And as a special bonus, in this 2-day course, I'm also going to teach you a personal trading technique that is based on steps 1 and steps 2. Because remember, steps 1 and step 2 are simply entry points, but I will share with you a way to trade it just based off of the entry points, okay? A way to increase your odds for consistency. Here's what you're going to be getting. The complete steps course, the 2 proprietary entry techniques, continuation entries, pullback entries. You can apply it to your current strategy or build your own strategy. Remember, a lot of traders like to build strategies, so you can base it off of these entry points. This will give you the confidence to pull the trigger. We're going to give you a great discount on the steps 2-day course, but this is also going to include the PTS Primo charts. We're going to make it even easier for you. We're going to include a great offer with the educational platform that automatically generates these steps 1 and steps 2 entry points. Every example and every display you saw today was generated using the PTS Primo charting platform that I designed with Pro Trader Strategies. Now we're going to throw in 12 months. This is usually costing over $1,700. We're going to throw in 12 months free. All right, you're going to save nearly $1,800 by signing up for the steps course today. All right. You're going to get 12 months free of the course. Now, one of the great bonuses is that not only are you getting 12 months free, you're also going to get the bonus of the scanner included. So you'll be able to scan on a nightly basis for all the setups for steps 1 and for steps 2. All you have to do is, in the drop-down menu, let's say you're looking at steps 1, click on scan. You'll see this window appear. You click on load symbols. The symbols will automatically appear, whatever market you're looking for. Maybe it could be steps 1 of the NASDAQ, maybe the S&P, maybe the foreign exchanges, maybe currency pairs, whatever market you're interested in. Then click on scan. And in about 30 seconds, you'll see a list here of green and red horizontal lines. These are simply green bars that represent buy signal in that particular stock or market. A red bar represents a sell signal. Okay. Now, let me show you what happened with the scan that happened just last month. At the end of July, there was a steps 1 scan that generated a buy signal in ZROZ. Okay. If you had become a member of the course, you already could have taken advantage of this, and you see the stock gained 10 points in just 4 days. This is the beauty of having the scanner. You can scan for these through hundreds, if not thousands of stocks on a nightly basis. So this includes the new PTS charting platform with the automatically generated signals along with the scanner. Now, normally this would cost you $29.95. That's not even including the $1,800 for the platform. We're discounting the price, not to $29.95, but down to $24.95. You're going to save $500. That includes the $1,800 off of the platform, and this also includes payment plans for a limited time. So if $24.95 is still too difficult for you to come up with one lump sum, we will still have a payment plan for a small deposit. You can still be up and running. You don't have to come up with that one lump sum. You can be up and running with a small deposit. Remember, this is a 2-day live event. This is not an online course that you get a recording or video of. Class size is limited, so reserve your spot now. Okay? Here's how to take advantage of this. Contact my sister site, Pro Trader Strategies. I developed all my courses and the platform with them. I would actually suggest calling them up. If you're interested in a payment plan, you don't have to come up with that $24.95. You can put down a small deposit. They would be happy to work with you, and they can set you up, and you can still be in the class for a small deposit. You can still be up and running with the platform. And we have a great tech support. They can help you put together the platform and have it up and running in just a matter of moments, okay? So once again, there's absolutely no obligation. Contact Pro Trader Strategies. Give them a call. Ask them any more questions about cost at 310-598-6677. Now, that link you see at the very bottom is the link that will take you up to signing up for the Steps Masterclass. But if you want a live link, because that's not live, just go to the chat box, and we just posted, there it is, a live link in the chat box on the far right-hand corner of the GoToWebinar menu. We just posted that, and so that's there for you. You can basically just click that on, and it will take you there, okay? All right, I'm going to answer any questions that you may have right now, and open up the question and answer box. So feel free to ask me. Let me see a question here. Why didn't it give a signal sooner on BYND? Well, remember, it's because we're trying to get you in with high probability. It's not, Steps is not designed to buy at the bottom. That's like saying, well, why didn't it buy Apple when it was trading at $1? There's nothing that's going to get you in at the bottom and at the top every time. What we're trying to do with all of our courses and with everything is simply make you a consistent trader. You see, trying to pick a top or bottom may work every once in a while, but you're not going to get consistency then, because every once in a while, as you saw on Netflix, it doesn't work. So you want to refine these setups to just make you a consistent trader, and that's what we do, okay? So if you're worried about picking the tops or bottoms, you've come to the wrong place. That's not what we do here, okay? We're simply trying to find that nice movie. Remember I gave you the metaphor earlier, Larry, about how we're not trying to pick the exact bottom or low. We're trying to find a stream that already has a nice current, and then we just jump in once it's moving. Or the metaphor, Larry, that I gave you earlier about seeing the train leave the station and then you jump on board. That's the same thing we're trying to do. We're trying to see that we already have a trend established. That's the high probability setup, and then you jump in, okay? Let's see, what is the fundamental difference between the Steps program and Strategy 4? Oh, that's a good question. Well, Steps is, remember, I think I went over this in the beginning, but if you weren't here, Richard, Steps is simply one piece of the puzzle. Remember, a strategy comes with a number of the pieces of the puzzle. It tells you basically a high probability area that's really ripe for the stock, the future, the currency pair going up or going down. Then it also gives you a high probability entry. Then it also gives you high probability exit levels. Then it also gives you high probability stops. Then it also gives you money management. These are all the things that come into play when you have strategy. Those are all the things in Strategy 4. Now, Steps is different from that because it's only one of those pieces of the puzzle. It's just the entry. And people will say, well, why are you just giving me the entry? Well, once again, like we explained at the very beginning, that is probably the #1 issue most traders have. They say, Steve, my strategy is based off economic news. I know you don't follow that. And I do pretty well, but I always get in too early and nothing happens. I stop myself out, and then a week or two later, it just takes off, okay? Or else they'll say, I got in, I got a nice little profit, and the thing just kept going, and I didn't know how to get back in. My strategy didn't generate another buy signal. So this is where Steps comes in. This is where we can help you with these points, okay? But remember, it's just a piece of the puzzle. A strategy is the full meal. Let's say you go into a restaurant, you order the full meal, all the appetizers, the drinks, the cocktails, the main entree, the dessert, okay? That's the full meal. That's the strategy. A entry point is just basically is just your first course. Okay, that's not the first meal. I mean, that's not the entire meal. That's just the first course. That's the same with steps. Steps is just the first course. And once again, someone would say, well, why are you just giving me the first course? Because a lot of students already have their full entry. They full have everything for them. They don't, entree, I should say. They don't have the full way to enter. They have the full meal, but their entry, their entree is wrong. So this is what STEPS does. It fills that gap, okay? It really includes it. And this is just the one thing that many times students have told us that takes them over the top, that makes them a consistent trader. We've got tons of testimonials where students applied STEPS in the past and they said, gosh, Steve, all I had to do was simply use STEPS and now my strategy is working perfectly because now I'm getting in at the right point. I was getting in too late or I was getting in too early. Now STEPS can really refine that. So with Larry was asking earlier, why didn't it get you in sooner? It's not designed to do that. Larry, it's designed as a high probability entry point. And that's what we're trying to do. We're just trying to make you a consistent trader, okay? Richard's asking, did we mention the PET-D? No, this is not something that goes in sync with the PET-D. This is something that, remember, the PET-D is something that confirms your signals for a full-fledged strategy. STEPS is not really something that has to be applied with the PET-D. You can use it if you want, but it's not required, okay? And I don't want to get too much into what the PET-D is because it's an entirely different method, entirely different. It's mainly used to confirm and to show you the trend, whereas STEPS is basically an entry technique. The PET-D can be used for multiple different things, but it is no way is it in any way related to STEPS. So we don't want to overcomplicate things, okay? PET-D is used in an entirely different foundation. Okay, good questions. Remember, this is going to be a 2-day live event. We were thinking about starting it this week. That's the tentative plans. But if we have more people signed up or if people are on the fence, we will postpone it to the beginning of next week. So we just want to get the class to a nice intimate size, and then that's it. We're closing it up. We've done this before where we've had literally tons of students sign up for something, and then what we've done is we've actually created 2 different classes so that we don't have like hundreds of people in one class. Then it just makes it, you know, too difficult to really have a one-on-one interaction with students. So if we have more people than we need, what we may do is have a second STEPS class, like maybe a day or 2 later, where it's covering for an entirely different attendees, okay? But right now, we're very close to the point where we can fill up the first class, and that's all we want to do, okay? So listen, once again, if you're having issues, if you saw anything here that could really help you, if you have already a trading plan that you feel confident with, but you're just entering too late or too early, or you don't know how to get back in, or you just are having too much difficulty pulling the trigger because you don't feel confident with your method, STEPS is for you, okay? It's going to be a 2-day live course, and I'll show you a specific way in which to trade it that I haven't taught other students before. This is just coming personally from my own trading. So this is a great way to elevate your trading. If you're interested, give Pro Trader Strategies a call. Remember, you don't have to come up with $24.95. You can have a small deposit. They'll still be giving you the class and all the credentials to join. On top of that, you'll still get a full year of the PTS Primo charting platform. This is, you know, that's gold in and of itself, all the extra different things that are included, as well as the bonus scanner with that. Sign up, or if you're still thinking about it, there's no obligation. Contact Pro Trader Strategies. They'll be happy to answer any more questions concerning the cost or any type of payment plan. They would be happy to work with you, okay? In conclusion, I just want to say thank you so much for attending today. I hope you learned a little bit about entries and how you can really fine-tune them and make them better for your trading. As you take one last look at our disclaimer, I just want to say thank you so much for taking time out of your morning to join me today, and I look forward to all of you becoming students of mine in the live 2-day course on STEPS. Thank you so much. I hope to see you in class. Bye-bye.